weekly forecast session. Just wanted to get the videos back up and running. I will obviously be sharing markups on my social media as well. So let's just break it down, top down, as we always do. A lot of the things are overlapping at the moment, but it'll be good to see exactly what we see. So obviously market has gone bearish. COVID spike has now been tested. We are kind of moving down into it. We can see that 50% of the inefficient level on that spike has been tapped. It was tapped with a liquidity grab. So in essence, we had equal highs, relative equal highs at this point. Liquidity grab down again, and then obviously the market has started to reject out of that liquidity grab, testing it at the moment now with the month that is currently being formed. Now, bearing in mind that we have actually now tapped the 50%, we've got rejection out of this zone. We want to see how the market now moves back past that point. So in essence, once the 50% is tapped, we don't want to see the market come back to that level. If it comes back to that level, it's possibly an indication that that level is going to then break. It may have reason to drive down deeper below the 50% mark, but we'll kind of get into that as we kind of step down onto the lower time frames. So as we go into the weekly, we can see the reason why the market is now targeting lows. And in essence, we have a weekly wick down the bottom here, which could possibly, it is effectively demand. So the market has broken demand on the lower time frame to the weekly, and we are now possibly going to be targeting the weekly wick down the bottom here to then get a reaction out of this to go bullish. So at the moment, it does look like we are still looking at approximately 60 odd pips that can still kind of move down. Or is it 60? Yeah, let's have a look at this. So effectively, if we come down, 250 odd pips again can still be mitigated. It was 60 to the top of that wick, so then effectively we've got 250 odd pips that can still be driven down to target the lows that were left behind at this point. Let's turn on some of the supply and demand levels that we kind of worked out, and then we can have a look and see exactly how they line up with our other levels. So supply and demand, so we have got an area of demand that we're sitting in at the moment on the lower time frame. That is also a weekly rejection wick that tapped the top of this demand, which was below us. And then we've got an area of interest below us there, which has been refined before this forecast to see exactly what could be done. Because it was a large wick, we had a large zone where we kind of had three demands that were sitting right above each other. So I tried to refine that down, and now we've got down to this point where we are at the moment. We can see supply was left behind as the market has continued to drop down. We've got supply all above us and above that. So obviously since January of this year, we've been on a downtrend. So the market has moved massively. But as we said, even in October, November of last year, we were still looking at lows to get taken. We were looking at sells to be in play from this point all the way down. Obviously hoping not to reach the COVID lows, but it seems like that's where we're going. This market will then get mitigated, and then obviously will be on the way up from there on. So again, a very good area to watch here, to allow ourselves to get into some really long buys that could possibly take us way back up to target highs that were left behind previously. So again, a very good long hold possibly is coming. Right, so we'll go down onto the daily, and we can see the reason that these zones have been marked up then. So effectively we had demand that was formed at the bottom here, the wicks that were kind of taken, equal lows form, liquidity grab on the lower time frame, and now we're looking for this demand to possibly get broken, tap into this demand at the bottom here, and hopefully see a slight rejection out of that to see supply get tapped and then drive down into this demand and then back up again. So our projection at the moment is something like this. It could be this, it could be this, it could be higher. So effectively, let's just basically mark it here and then back down. Okay, so we're looking at tapping down, demand, supply, and then back down. Let's go into the 4 hour, and we can kind of see how we refine this. So what we have done is with the fibs, we'll turn them on. We've got a daily wick that we kind of were watching at this point here. So I've made it clear to see exactly what the fibs are for. This is the weekly wick that we have refined our demand zone from at the bottom on the lower time frame, but effectively we're looking for 50% of that to get tapped. When that gets tapped and the market starts to reject past that point, we'd want to enter our trade at this point. This is the 4 hour wick that's formed in demand that we're watching for to get targeted. And we've got demand that we're currently sitting in at the moment, but there's a lower time frame refined zone below us at this point, which we want to see how the market reacts to. So when we go down into the 4 hour, we can see that refined wick which was the cause of demand and then market to move out with a volumetric push out of this zone, is now going to be our check measure to see how the market kind of reacts out of that, to see whether we're going to take supply above and then drive down deeper. And we can see how the equal lows were then left behind here on the 4 hour. Liquidated at this point, the market is now rejected out, but it's not making a strong move out. We'll see what happens through Asia and into the beginning of the week and see how things kind of follow on from there. Let's jump down onto the 1 hour. If these forecasts are too quick for a lot of you, please do let me know in the chat, and then obviously I can try and do what I do. I don't want to go into too much detail and too much analysis on this. It's literally just showing you my zones. It's taken me approximately an hour to kind of put this together, but again, it was a complete fresh look at the charts from the top down, and I wanted to also show you something else. So we kind of had this trend where I always have said that we have Monday one way, Tuesday, Wednesday, Thursday the other way, and Friday reversal on GU. And when we look at the previous few weeks that have played out, we look at Monday, Tuesday one way, from Wednesday, Thursday, Friday trending. We look at the week before, Monday, Tuesday flat, Wednesday shoots up, Wednesday, Thursday, Friday trending. We look at the week before, Monday up, Tuesday, Wednesday, Thursday, Friday trending. We look at the week before, Monday up, Tuesday down, Tuesday, Wednesday, Thursday, Friday trending, Friday reversal. Okay, so it shows that clearly it's not that there's nothing happening, it's actually a pattern that is recognizable. So we've got Monday up, Tuesday up, Wednesday, Thursday, Friday down, and then obviously the market reverses. So it's something to watch for. The benefit is that within TVT we do trade Tuesday, Wednesday, Thursday, so it's possibly a good thing that when you get the trade at the right time on a Tuesday, whether it's in London or New York, you can try and hold that trade until at least end of Thursday. It shows that the market does actually react and behave as we kind of have assumed and analyzed. Right, so on the 1 hour, again, our zones are pretty much the same. We've got a few fibs here that we're watching on the daily wick. 50% have been tapped end of the week, rejected out of that, but it looks like it's coming back. Asia, we'll have to see what it does. Let's turn Asia on. So we've started the Asia session. We'll have to see what happens throughout the week here. We're currently sitting in demand, so obviously we've had a liquidity grab occur. At this point, the market has rejected out of that, but hasn't respected supply, hasn't tapped up into supply prior to kind of take that. The supply that was formed for the liquidity grab is what has been respected at the moment, but it has been liquidated as well, so it's weakened that supply. And we'll have to see exactly what happens, whether Asia kind of then takes that supply out and continues to trend up to an imbalance pool, or supply above to then attack demand below. Let's go on to the 15-minute time frame. Very, very similar type of setup and scenario. On the key levels for the week ahead, effectively there are still a lot of levels above us, but let's just go through what we exactly want to see for this week. So we have started the Asia session already. The forecast is coming out a little bit late, so we can see that certain levels that were kind of formed within the Asia session have kind of been respected. As the market kind of drives up, 74 and 0 was respected, and it kind of moves itself down. We want to see how this imbalance pool of high volume spikes gets respected in the Asia session, which kind of was the liquidity demand, the liquidity grab rather, sorry, on the way down, rejection out, and then obviously it left an imbalance pool at this point of high volume spikes, which kind of probably will act as demand. We want to see how that gets held. On the wick that kind of formed the liquidity grab and then kind of moved the other way, we've got the daily 50% that kind of could get tested. So again, the market could break down below this level, down to the 50% of this wick. And then we want to see how it kind of moves itself across. So we'll move that across here. As the market kind of moves out of this zone, we then want to see how it targets imbalance pools above us, which kind of caused moves down on Friday. And then we've got supply sitting above us, which was the large move down on Friday as well. We've got bearish imbalances in their key levels, which are high volume spikes on factored in both the 1 hour, 5th or 30 minute, as well as the weekly time frame. And there's 104 bearish imbalance that caused the break and drop down in Frankfurt, as well as London on Friday. So we want to see how those get respected. As I said, in respect of the higher time frame as well, we do have levels up there that are being respected. So we'll go into the 1 hour and see exactly what we do have above us. So there are levels all the way above us up to the weekly POC up here, which kind of was Thursday. We've got supply sitting up here which could get targeted and then respected, and then we've got all the levels above us, some of which have now been spiked and taken, but I've left them on at the moment because there's a lot of consolidation at this point here, which kind of was the weekly POC from the previous week, which kind of caused a reaction this week as well. So we've got levels up here that kind of are interesting. We want to see how they kind of get targeted and manipulated as they kind of come back up to that point. And then all the levels above us that are still currently active. So we've left them on the chart because they are relevant and we don't need to kind of go back and reassess them and analyze ourselves that far back as the weeks develop. So let's see what happens. Again, we're looking for demand to get hit up into supply, possibly even targeting the weekly POC to then come down. The market won't reverse so massively. So hopefully we're looking at a retracement onto the supply reaction out of that into demand below and then up again. We'll see how it kind of plays out. I may not be on the charts tomorrow, but from Tuesday onwards, we'll try and get back into the swing of things. The mentorship is still open. We've still got active members, and hopefully videos like this are benefiting not only yourselves on the YouTube community, but also the members in the chat. A bit more depth has gone into this one. Wanted to kind of show you how the top-down analysis is done, and also factoring in, how we obtain our key levels off the tools that we have within the mentorship, as well as the volume provider from the futures market. Okay, hope that makes sense. Speak to you guys soon. Trade safe. Enjoy the week. Bye.